Just want to go through some charts with you guys real quick before the start of the week. Now the grain markets are closed, but Trump had his inauguration today, and he did not announce any imposed tariffs, at least today, so that is hopefully a friendly factor looking here short term. So grains were not trading today, but what was trading today was canola. Canola is up 3% on the day, so hopefully that's a little bit of foreshadowing and potentially a friendly sign for the grains as well that he didn't announce tariffs. So hopefully we can find some momentum off of that. But looking at the charts, first we have March corn. Now we did hit my 485 target that I've been talking about for quite some time now. Now a target, when we hit it, doesn't mean that I think we're going lower. It's just simply a spot where I'm looking to take risk off the table. And targets are just a good way that you can spread out your risk, just not putting all your eggs in one basket. So reason number one why 485 was my target is that it is the golden fib extension of this first move right here off our contract lows. So we have our contract lows around 403. We rallied up to 451. So 482 is 161.8% of this entire rally right here. So that is reason number one why 485 was my target. Now this is reason number two why 485 was my next target. I've shown you guys this chart several times in the past. I've been talking about this ascending triangle for the past few months. So there's two ways to calculate the implied upside objectives for this ascending triangle. You have an aggressive way and you have a conservative way. So first, the conservative way is you take the first back test of this triangle all the way up to the top of the triangle, which gives you a 35-cent range. You add that range on top of the point of breakout and you get 485. Now the more aggressive way, which is actually the textbook way to calculate this implied move, is you just simply take the entire range of this triangle, which is 48 cents. So that would give you 499. Now the third reason why 485 was my next target is that it is 78.6% of our May highs. So we have our May highs up right here, our August lows down here. This 485 is 78.6% of that. So we broke the 50%. The next target was the 61.8% retracement, which is why 467 was our previous target before the USDA kind of shook things up and made the outlook more bullish. So next objective was 78.6, which is 485. Next, I just kind of want to show you guys this chart right here. So corn did break a pretty significant downward trend that we've been trapped in since October of 2023. So we came down, came back up, tested this trend line. This is actually our May highs. We rejected off of it. Now we came back up. We actually busted through it, came back down, kind of consolidated right above it. And now we're pushing higher. So that is a very friendly sign for corn. Next, I want to take a look at continuous corn. We also did something pretty significant on the charts here as well. We actually posted our first higher high since all the way back in 2022. So I circled all our previous highs right here. So you can see all of them are lower than the past, except for this one. So we actually did bust above our May highs on the continuous contract. Again, the continuous contract is just simply front month corn. So making our first higher high is pretty significant for the corn market as well. So now that we've hit our 485 target, the next point of resistance and next target is going to be $5 to 508. So $5 is the big psychological target, and then 508 is our May highs. Next, taking a look at D's 25 corn. So we did post 6-month highs here. We hit the 38.2% retracement from these May highs. So the next upside target is going to be right around 464, which is 50% of our May highs. And then we have the 61.8% retracement, which is 472. Then we do have this longer term downward trend that we've respected for quite some time. So that would also be another point of interest, but we'll talk about that more when we get there. So first target is going to be 464. Now I do think D's 25 corn does have a pretty decent chance of trading somewhere in the realm of 475 to even $5, possibly higher. That's just my personal opinion, but for a lot of you, it probably does make sense just to simply take a small amount of risk up along the way, just spread out your risk at each of these targets. So that's it for D's 25 corn. Next, taking a look at March beans. So beans bounced exactly where they needed to on Friday in this golden zone. So this is just our 50 to 61.8% retracements of this little rally that we had right here. So we needed to bounce there to kind of keep the bias remaining higher and keep the upward momentum going. And we did just that. So that is a good sign. Hopefully we can carry that on starting the week. Now, really, we just need to continue to hold these lows. My next possible upside target is going to be right around the 1080 range. So basically that is just this downward trend right here. We tapped it once, tapped it twice. Hopefully we'll get up here a third time. So that's my next possible target I'm looking for March beans. Next, taking a look at Nov 25 beans. So we did reject right off of this 38.2% retracement from our May highs. So the next upside objective is going to be 1082.5, which is the 50% retracement. Then after that, we do have 1111, as well as this longer term downward trend line that we have been fighting for quite some time. So this trend line would also be a decent spot to look to take some risk off the table as well if we can get up there. Next, taking a look at continuous wheat. So there's really just two simple things we're watching right here. We have this downward trend from May, and then we have this support which we've continued to hold the entire year. So if you look here, we have bounced in this box multiple times throughout the year. So bulls want to continue holding this box. If we fail, we're probably going to be looking at another leg lower and perhaps come back and test this longer term downward support trend. So bulls really just want to get a break above this downward trend that we've been trapped in since May. So last week it did look like we were trying to break above it, but we kind of failed, came back in, and now we're still trapped under it. Next, taking a look at March Chicago wheat. Kind of the same situation here. We did bust this downward trend from May, but we're kind of just hovering right above it. So I do think wheat is still in a decently bullish pattern. I still think we're in a falling wedge, which is a bullish pattern. But really, we just need to continue to hold these lows. We have bounced off this 529 level, looks like 5 or so times. So bulls would like to continue to hold that and then get a bust above this 546 level to confirm our upside. Then our next point of resistance is likely going to be this 584 or so level. Lastly, taking a look at March KC wheat, it's kind of the same story here. We just really need to continue to hold these lows like we've done. Then really bulls just kind of need to take out this new downward trend that we've created. And then the next point of resistance is probably going to be around this 589 or so level. So that's all I have for today. If you have any questions, you can give us a call or a text anytime, 605-295-3100. Thanks for watching.